Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Well, let's start on Wall Street, where stocks closed lower overnight and Treasury yields rose, the 10-year to above 4.1%. There are still major concerns about the economy, even though earnings are coming in better than expected. What's the story in the global markets?
Okay, well, on Wednesday, U.S. time, Dow fell by 0.33%, S&P down by 0.67%, and NASDAQ down by 0.85%. It snapped a two-day winning streak, but because the winning streak on Monday and Tuesday was fairly strong, the week, at least for now, is still positive. As you mentioned, the earnings season is so far so good, but 10-year Treasury hit 4.136% interest yield, which is the highest since July 23rd, 2008, and it seemed to have spooked the market. And the tech stocks seems to be the most affected. Now, the Fed Watch currently says that the people surveyed there, about 95% believe that there will be a 75 basis point increase in interest rates the next time the Fed meets. But the strange thing is we now have about 5% of the people believing that it will only be 50 basis points. I'm not sure where exactly they're getting their justification for this. Just a week ago, there were no 0% prediction of 50 basis points and 2.7% of 100 basis point increase in the next meeting. So the market may be getting too irrationally optimistic again, but there is a more and more economists, bipartisan, who are now worried that Fed might overdo the raising of the interest rates. So that may be figuring into these surveys as well. Year to date, Dow is down 16.8%, S&P down by 22.96%, and NASDAQ down by 32.54%. Asian stocks, they were down. Nikkei, Shanghai, and Hang Seng were all down. As you mentioned, the Nikkei losing. It's the yen depreciation seems to affecting the market very much. China, the big news there was that they delayed their announcement of the GDP figures. Currently, there's a 20th National Congress meeting, which is a showcase for Xi Jinping. He will be the first person to become president of China for a third consecutive term, and there's big suspicion that perhaps the GDP numbers are worse than expected, so they do not want to show it during the Congress meeting. The China's growth target this year was 5.5%, but the actual growth rate is now expected to be around 3%. For Europe, today the trading just started. FTSE is up. FTSE is down and CAC is up. The big news there is that UK inflation is now 10.1%. UK has lost its finance minister and home minister because of anger over the unfunded tax plans that the trust government had installed. The UBS Wealth Management chief economist is saying that UK markets now have a competence risk premium. So we can see that the international investors are now very sensitive about government policies, and that's something for Korean policymakers to be aware of.
Competence risk premium says a lot. Well, Professor, Korean stocks lower today as well. Financial shares were down more than 3%. On the other hand, shares of machinery and display panel makers up well over 2.5%. Kakao was down again. Tell us about the domestic market, Professor.
Okay, well, Kospi was up for the first 2 days of the week, but they're down for the second day today. It's down 0.86%. It ended today at 2,218.09. Individuals bought, institutions and foreigners sold. Kosdaq down 1.51%. Ended today at 680.44. Again, individuals bought and institutions and foreigners sold. But perhaps the bit of a good news here is that even though the market has been down for 2 days, it's still slightly up compared to end of last week. And another perhaps piece of good news, even though foreigners on the whole sold today, the market seems to be fairly happy that foreigners are coming back into Kospi. They've been buying up semiconductor stocks, Samsung Electronics and Hynix, and battery stocks, EV battery stocks, Samsung SDI and LG Energy Solutions. So it's still a minority, but some analysts are carefully suggesting that there may be a recovery.
Well, now, of course, Professor, we've seen the Korean currency depreciate against the U.S. dollar. Japanese yen doing even worse. It's now just under 150 yen to the dollar, which is a level it hasn't crossed since 1990. Very different strategies being pursued by the Bank of Korea versus the Bank of Japan and the Fed, rather, or the other way around. The Bank of Japan and the Fed, of course, doing one thing. And Korea is doing going along with the Fed. So what do you see happening with the Japanese yen? What are the implications there for the Korean economy?
Okay, well, Japan and China are islands of loose monetary policy among advanced countries. These two countries are practically the only ones which are maintaining a loose monetary policy. China just today froze their key one-year interest rate. For Japan, they're sticking to 0% interest rates. They have been, Bank of Japan has come out saying that they are not going to raise the interest rate at this time. That's partially because inflation in Japan is still very low. The CPI inflation, the latest one they have was for August, and it's 3.0% for 12 months, 0.4% for just the month of August, and the core inflation was 2.8%, and they've been waiting decades to have a persistent inflation of 2%. So they may not want to give this up. Now, growth, it's not that bad for Japan. The third quarter growth is now estimated perhaps to be 1.54%. And that's significantly higher than the 0.43% growth, average growth that they had between 1980 and 2022. The official figures have not come out yet, but if these projections are true, then they're not going to have a very bad quarter compared to their previous 20 years. Yen has depreciated 4.4% over the last month. Year to date, it depreciated by 30.3%. Compare this to Korea, which has lost 2.98% of value over the last month and 20.64% over the last year to date, and the yen depreciation is running higher than also Euro, Great British Pound, as well as Chinese Yuan. So of the advanced countries, they do have the worst case of depreciation. But even if Japan did decide to raise interest rates somewhere close to the United States, well, right now they're at 0%. They're not going to be able to raise the interest rate that quickly in a short period of time. So they're choosing intervention in the foreign currency market as a tool to try to get the value down. They intervened about 2.3 trillion yen so far. I'm not sure if this is going to work, but that's the strategy that they've taken. The serious problem that they have, in addition to the depreciation of the yen, is the trade deficit. It's about 2 trillion dollars. 2 trillion yen right now, and it's adding to their inflation like it's doing to Korea. But one factor that I would really concentrate on for Korea is that during the Asian financial crisis, before the crisis hit 95 and 96, we saw a lot of money flowing from Japan to Korea, and that was part of the reason why a bubble was formed in the Korean economy before the Asian financial crisis. I'm a bit concerned that we see somewhat of a similar situation here because the yen is losing value faster than the Korean won, just by difference in depreciation. Japanese investors investing in Korea will see a gain, but not only from the difference of depreciation, but also difference in interest rates. Korea does have a higher interest rate than Japan. So if we see a lot of capital inflow from Japan to Korea, that's actually something to be worried about, not necessarily be happy about.
Well, that's a really interesting way to look at it, Professor. We'll have to talk more about that another time and leave it there for today. Thank you, as always, for coming on the program. We really appreciate your insights.
Thank you.